I got paid to buy a rental property. Welcome back to my channel, everyone. On this channel, I like to talk about different ways to make money on your phone, creating passive income sources, making good sound investments, and some helpful tips here and there. So if you like that type of content, then hit that like button, subscribe, and click the bell notification so you get notified when I make videos in the future. Also, I am not a professional on this topic, so do your own research before using any of these methods that I talk about today. Let's go over how I used the B.R.R.R.R method to get paid to buy a rental property. Through many different creative ways, I used private lending, credit cards, traditional mortgage, and cryptocurrency to maximize profit out of this deal. Before going any further, if you don't know what the B.R.R.R.R method is, it stands for buy, rehab, rent, refinance, repeat. At that point, if you do this successfully, you should have most, if not all of your money out of the deal so that you can go ahead and do it again. So let's go over the property, timeline, and market I am in before digging into the numbers. I bought a 4-bedroom, 1-bath house in Elyria, Ohio, which is about 30 minutes west of Cleveland. It is a smaller market with a population of about 53,000 people. So my search criteria for the property type that I look for is usually around 40 to 50 listings on any given day. Over this past year, it has been a little lower, closer to 30 to 40. This property was purchased April of 2020. So right when all these lockdowns were in full effect and no one really knew what was going on. Now, with my full-time job still being intact, but my social life being shot, I figured might as well buy another rental property and do most of the work myself in order to save on labor costs. Now, I did outsource some of the major stuff, like the plumbing, roof, windows, and some siding work. But figuring with housing still being an essential job, this was a much better option than just going home after work, sitting there watching the news. So let's jump into the numbers and show you how this all worked out. Purchase price of the home, $21,000. I borrowed $35,000 from my private lender for a 1-year term, paying an interest rate of 12% with monthly interest payments of $350. The rehab of the house cost me $13,004.63 with holding costs of $1,762. That covers things like utilities, permits, legal, insurance, closing costs, and really anything that I had to spend money on outside of rehab before I had a tenant in place. Over the course of the 11 months I needed my private lending for, I paid a total of $3,850 in interest payments. That brings my all-in total for this house to $39,616.63. I did have some bumps along the road that caused me to refinance this property a little later than I would have liked to, but I still did refinance it within my 1-year term. I technically did a no cash out refi, meaning all I was doing was refinancing this short-term lending into long-term fixed lending at a lower interest rate and paying off my private lender. I ended up locking in a 30-year fixed rate mortgage at 3.125%. Amount of that loan, $38,800. I needed to bring $131.31 to close as I wrapped the closing costs into the loan. That does bring my out-of-pocket expense to this point to $947.14. So that really doesn't sound like I made money buying this property, seeing as I had to leave some money in the deal. But don't worry, I'm getting to that in a second. First, let's run through the rest of the numbers. This house rents for $800 a month. My mortgage, taxes, and insurance is $286. Think about that. I was paying more money every single month just for those interest payments on my private money of $350. Now, my mortgage, taxes, and insurance are all wrapped into a cheaper payment than my interest payment. Next, this property is under property management with a flat fee of $85 a month. As this is a completely rehabbed property, I hold 8% aside for repairs, 8% aside for CapEx, and 5% aside for vacancy. So that adds up month after month for whenever any of those come into play. So now I have that money sitting aside. This is smart to do anytime you have a rental property, as you have to be responsible and have reserves for when things go wrong. Believe me, I've only been doing this for a little over 2 years and things do go wrong. Well, those all total to $168 a month. That gives me $203.14 cash flow every single month. And this does not even include the depreciation I get on this property come tax time, or any of the repairs I get to write off, seeing as this is a rental property. So this property appraised for $72,000. The after repair value of this property came in at $72,000 after appraisal. So I really could have pulled more money out of this deal when I refinanced. My number on any of my rentals is $200 of cash flow a month. So in order to keep my number where I needed it to be, this is the amount of money I could pull out. So before we get into all the fun stuff, if I didn't do any of this extra work, I would have a 257% cash on cash return. That is how hard your money you put in the deal is working for you. But let's get into how I actually made money on this deal. As I had just about everything covered by my private lender, I still opened up a Bank of America Cash Rewards credit card. This gave me an $8,000 limit and 18 months with 0% interest as long as I make my minimum payment. So really, I took out an 18-month loan for 0%. With that being said, I put as much of the rehab for this property on that credit card, just making my minimum payments so that I can keep that 0% intact. So after I spent $1,000, I got a $200 bonus back. On top of that, this is a 3% cash back card on the category of your choice. So you could probably guess the category I chose. Yeah, it was home improvement. So I was getting 3% cash back on all of the materials I put into this property, getting me about $221 in cash back. On top of that, I opened a Bank of America checking account, which also gave me a $100 bonus. So that adds up to $521. Now here's where it gets a little more creative. Bringing cryptocurrency into play. I don't know how versed you are in cryptocurrency, but I follow the space very closely. And one of the biggest ways to earn yield from this cryptocurrency space with minimal risk is stablecoins. There are multiple different stablecoins. I use USDC, which is a coin that's tied to the dollar. So you put your money sitting in the bank account doing nothing, getting maybe 0.01% interest, over into some of these lending platforms like Voyager or Celsius, earning you anywhere between 9 and 10.5% APY on your money. I have plenty of videos on my channel covering these lending platforms if you had any interest in that. But since I didn't need a lot of the money from my private lender to do the rehab, seeing as I put it all on the credit card, I just threw this in Celsius. That was earning me anywhere between 10.51% and 12.5%, varying slightly in rates over the course of this year. And actually, I'm still going to be earning interest on that money for another 6 months until I have to pay off that credit card. Now, when you use this type of strategy, you do have to be smart. Don't go charging all this money on the card if you can't pay it off. I have that money sitting there gaining interest until I have to pay off that card in 6 months. So the interest I will accrue on that money sitting there, which I didn't have to use for my private lender, is about $1,665, give or take a little, depending on how interest rates are over the next 6 months. That brings all of those extras to a grand total of $2,186.25. So let's subtract that $947.94 out-of-pocket expense I had, and that brings my profit to $1,238.31. So with all of this, I am essentially paying myself $1,238.31 to acquire this rental property. Pretty good deal, I'd say. Now, yes, there was a lot going into this deal, and I really didn't need to do all of this, but if you've watched anything on my channel, I like to find every little possible way to pull money out of every deal I do. So let me know what part of this deal you want more information on, and maybe I can pull that out and make a separate video specifically on that topic. Whether this is the credit card game, cryptocurrency, the BRRRR method, or private lending, which I am still getting used to as this was my first deal I used private lending. So I hope this video helped. And if it did, then don't forget to give yourself a raise. I'll see you next time. A few videos popped up to your left and right. If one of those perk your interest, give it a click.